Hello and welcome. This is Business Incorporated coming to you live from our Lagos studios. I'm Chimezie Obi Iwago. On the show today, Zambian inflation at 3-year high increases chances of rate hike. The International Monetary Fund approves a new 3-year extended credit facility of about $191.9 million for Mali. Plus, Kenya corn output seeing 25% below 5-year average on drought. Get the show started now with the markets, and here on the African continent, investors in South African stocks can thank trade hostilities between China and the US for turning this month into the worst August they've experienced in 21 years. Well, Johannesburg's benchmark index has fallen 4.5% since the month started. As of Wednesday's close, the biggest August decline since 1998 and the steepest retreat for any month since October last year. However, at intraday today, the index rebounded up 0.97%. Egypt was also up 1.65%. However, the NSE index here in Nigeria lagged down by 0.21%. Kenya closed in the red on Wednesday. In the Middle East, Saudi stocks were down, extending losses for the second straight session, pressured by banking shares as receding fund inflows continued to keep investors at bay, while other major Gulf markets rose. On Wednesday, a second batch of Saudi shares was added to the MSCI Emerging Markets Index, but the move failed to lift the market as funds remain bearish. The Saudi index fell 1.20%, with Bank Saudi Fransi declining 1.1% and Saudi Basic Industries losing 0.4%. In Qatar, the index increased 2.07%, led by a 2% rise in lender Masraf Al Rayan and a 1.4% gain in Industries Qatar. The Dubai Financial Markets General Index was up 0.03%, helped by financial stocks. Dubai Islamic Bank, the United Arab Emirates' largest Sharia-compliant lender, and Dubai Investments both were up 0.8%. Abu Dhabi Index also rose 0.72%, largely driven by Emirates Telecommunications, which was up 0.6%. In Europe, markets reversed early losses in the morning as soft inflation data reinforced expectations that the ECB will inject stimulus into the economy next month. Well, my colleague there at the Frankfurt Stock Exchange, Ashutosh Pandey, will tell us more about those data. Good afternoon, Ashutosh.
Good afternoon, Chimi. Thanks for having me.
You're welcome. Well, Brexit and US-China trade war continue to dominate investors' mind globally. I'm sure it's not very different where you are.
Absolutely not. Yes, but the cake today has been taken by renewed optimism on US-China trade front. That's after China said that they would not retaliate immediately to the new tariffs that are going to go in place on Sunday. So that's a definite optimistic note for the markets. And you can see behind me, DAX surged immediately after this announcement was made by the Chinese Commerce Ministry. And this also shows the desperation of the markets, that they are just looking for any possible positive news as far as the trade war is concerned, any positive development and any possible signs of easing tensions is a definite plus for the markets. And China has also asked the US to actually provide better atmosphere for the talks that was scheduled for September. And it said that perhaps, in fact, not perhaps, but it said that it is in talks with Washington about this possible meeting in September. So that's a plus. But the other thing that also was cheered by the market is reinstatement of Prime Minister Conte in Italy. These talks, you remember we talked about it yesterday, and they were finally successful, and the Five-Star Movement and Democratic Party have agreed to form a coalition government. So that was definitely plus. The Italian bonds yields fell to record lows after that. There was so much demand for Italian bonds today.
All right, aside from politics and, of course, the US-China trade war, some key data have been released in the EU, French growth data and German jobless numbers. What do they say about the bloc's health?
Well, it's a mixed story there, because the German unemployment data, it's still stable at 5.1%, but the joblessness was marginally up. I mean, what this means is that this is the fourth straight month that joblessness has failed to fall. I mean, this after years of decline that it has seen, for almost 6 years, it has been just declining. So there are some worrying signs there, because if there is more joblessness, what it means is that it is going to affect the consumer spending in the country, and that has been holding quite solid despite all the concerns about trade war. Domestic consumption has been pretty solid, and that's where it's a little concerning for the markets. And as the French data, in fact, was positive. It grew at faster, the French economy grew at a faster rate than earlier estimated, 0.3%, well above its neighbor Germany, which contracted in the second quarter at minus 0.1%. So that was a plus for France, but it also shows that how heavily reliant Germany is on exports, and the fact that French economy domestically is doing better than many in the European Eurozone. And also there was another positive there, that it was about the Eurozone economic confidence, and that actually surged unexpectedly, and that just set aside by a margin recession fears.
Another interesting one there, Germany is looking to cap its corporate tax burden at 25% as the country seeks to help smaller businesses amid signs the economy is lurching into a recession. Now, is this also something the market is looking at?
Oh, most certainly, it's a positive. These companies that you talked about are the backbone of the German economy. They employ 60% of its population. I mean, 60% of the people who are employed in these small and mid-sized companies, which are the so-called Mittelstand companies. So that's a positive. At this point of time, they were all giving the tax on them is 30 to 33%. And now the government is moving in a direction where they could cap it at 25%. Though the Chancellor Angela Merkel's junior partner in the coalition, the Social Democrats, are still to give the nod, as this was not part of the coalition agreement, so they still have to give the nod to this. But this comes at a crucial time. As you mentioned, the German economy is struggling, and this could definitely be something that could reduce the strain on these companies that contribute heavily to the German economy, even though the impacts of this would be felt only a little far away and not immediately. A definite positive as far as the markets are concerned.
All right, Ashutosh, one day to say thank God it's Friday. Enjoy the rest of the day.
Sure.
Meanwhile, investors are monitoring political developments after news on Wednesday that UK Prime Minister Boris Johnson will suspend Britain's parliament for more than a month before the country's departure from the European Union. Sterling Slade on the news. It's past midday now. Let's see how the markets are holding up. Let's cross over to Juliana at our London studio. Hello, Juliana. Good afternoon.
Good afternoon, Chimaze.
Now, the FTSE 100 gained about 0.6% this morning, helped by a small drop in the value of the pound against the dollar and the euro. How are the currencies and equities markets holding up at the moment?
Well, let's go straight into them, shall we? The FTSE All-Share is up by 1%, big percentage raise. The FTSE 100 is up 1.17%, and the FTSE 250 is up by 0.26%. In currencies, the British pound is down on the US dollar. It's down 0.07%. It's also down on the euro by 0.01% and down on the Japanese yen by 0.08% after Boris Johnson's Brexit fiasco yesterday. About 1% was taken off sterling.
And then shares in software giant Micro Focus International fell as much as 30% in the morning. That's after the company said sales will be worse this year than expected. What's happening to the largest UK-based tech firm?
Well, the British IT company's chief executive, Stephen Murdoch, he released a statement saying that the company would be accelerating their strategic review after those poor sales figures. They spoke to shareholders this morning, and they were honest enough to say that the macroeconomics field is changing. Microfinance, they provide IT support to banks, airports, airlines, and also big retail spaces. And the clientele is just changing. As soon as we are adapting and we're innovating more quickly, their clients are taking a lot more time before they purchase their products. Of course, as well, they spoke about Brexit and consumer confidence and the larger woes that we're seeing with the global economy. But some analysts say that they will fight back. They've been in trouble before. In 2017, they purchased some components for their products from Hewlett-Packard for about £8 billion. And it took them a very long time to find out how they could work that within their system. And because of this slow process, they lost about 50% of their revenue. But within a year, they clawed it back. So not good news today, but there is still hope for this billion pound firm.
Right, and U.S.-China trade war have been rocking the market, and U.S. tariffs on China now are due to kick in on Sunday. What's on tap for UK?
Well, signs that China may be cooling on its rhetoric with the US is really what's pushed that FTSE all-share up by a percentage point. Lots of people are interested in what's going on there. Very early this morning, the Chinese e-commerce ministry did in fact say on camera that they didn't want an escalation in this trade war, and that it isn't benefiting the People's Republic. So there was no slinging match towards Trump. They purely were focusing on their economy and their responsibility, and they said they want to put an end to it. There's been several reactions over in the UK, so much so that even with what happened and what's happening here, that hasn't affected the FTSE. The traders are really excited about this. So there is hope that, the two of the biggest economies in the world will try and resolve something, and that will put less pressure on Britain.
Well, let's hope they do so. Thank you, Juliana, and enjoy the rest of the day.
Thank you, Chimi.
Yeah. And stocks in major Asian markets were mixed today as investors continued to watch the yield curve in U.S. Treasuries, which inverted further overnight. Mainland Chinese shares dipped on the day, with the Shanghai Composite slipping 0.1% to about 2,890.92, and the Shenzhen Composite was 0.172% lower at around 1,591.08%. And Hong Kong's Hang Seng Index, on the other hand, was up 0.28% as of its final hour of trading. The Nikkei 225 in Japan closed slightly lower at 20,440 points, while the Topix finished its trading day largely flat at 1,490. Over in South Korea, the Kospi closed 0.4% lower. Australia's S&P ASX 200 rose 0.1% to end its trading day at 6,507.4. And the U.S. stock index futures turned positive in the morning after China said it wished to resolve its protracted trade dispute with the world's largest economy with a calm attitude. At around 4 a.m. Eastern Time, Dow futures rose 184 points, indicating a positive open of more than 197 points. Futures on the S&P and Nasdaq were both slightly higher, reversing earlier losses. The comments appeared to soothe investor concerns at a time when many are worried about the possibility of a global recession. On the data front, the latest weekly jobless claims, a second reading of second quarter GDP, and advanced economic indicators for July are all scheduled to be released at 8:30 a.m. Pending home sales for July will follow slightly later in the session. In corporate news, Toronto Dominion Bank, Best Buy, and Dollar General are among some of the companies expected to report earnings before the opening bells. Oil prices fell today for the first time in 3 days after San Francisco Federal Reserve President Mary Daly sounded a note of concern about the strength of U.S. economy. Brent crude was down 30 cents at $60.19 a barrel, while U.S. crude was down 15 cents at $55.63 a barrel. Oil prices rose around 1.5% in the previous session. Concerns about a slowdown in economic growth due to the trade war raging between the United States and China, along with a potential hit to oil demand, are keeping prices in check. We'll take a break, and when we come back, we look at how the fall on the pound will affect Nigeria's diaspora remittances on our commodities market update. Do stay with us.